Hey, everybody. My name is Van Richards. I'm a financial advisor, and I'm here today to help you grow your financial knowledge so that you can be in control of your financial future. And today we're going to talk about a stock, a dividend stock that's really kind of unique because when we look at it, it's actually holding its own on a day when it seems like the stock market is in free fall. Now, that doesn't mean that it's going to happen all the time, but the stock that we're going to be talking about today is one that I think will add to your retirement portfolio if that's what you're trying to do. If you're looking for just a good stock that pays dividends, this is going to be one for you to pay attention to. Now, we're not going to be looking just at the bonuses, the best parts of this stock. We're going to take a little bit of time and we're going to analyze some of the downsides of it too, because you need to understand that investing in stocks is not guaranteed. We have to look at the pluses and we have to look at the minuses. We've done a little bit of change up on our show. I know in past, some of you have watched me when it was called the Stock Analysis Show, and it went through being called the Successful Investor Show, but there's a lot of different things that have changed over the past couple of months. And I arrived at calling this the Retirement Learning Lab. I'm talking about particular stocks today that will help you in accumulating money for your retirement or in paying it out. But if you're here and you're thinking, I'm not talking about a retirement account, I want to talk about stocks. So that's great. I'm going to do that for you today. But the particular focus is going to be how this company can help you to grow a portfolio, and it can also be used to pay you some dividends when you need some income down the road. So let's go ahead and get started into the Retirement Learning Lab. Okay, as we begin into talking a little bit more about Genuine Products Company, the first thing that I really want to try to do is I want to look at the company from the perspective of what they do. Peter Lynch managed the Magellan Fund for Fidelity for years and years and years. And his philosophy was really look at what the companies do and see how that they profit from the real world. I know that there's some of you out there that'll like somebody like David Portnoy. And I love watching David Portnoy. I think he's very entertaining. But I heard him say something one time that, in my perspective, I don't agree with. And he said, he was talking about a particular stock, which whatever reason he was trading. And he said, I have no idea what they do. And I thought to myself, wow, how could you do that? You have to understand what the company does before that you can really know whether it's something that you want to put your money into. So what we're going to do is we're going to take a few moments and look at the idea of what's this company do so that you can understand it from that perspective. So let's get into that just a little bit more today. Now, Genuine Parts Company is a company that supplies parts for automobiles and for industry. The major part of the company, as you can see on the screen here today, this side actually, is that it is a automotive parts group. 2/3 of the company is automotive parts. 1/3 of the company is in industrial parts. Now, when we look at it, we break it down just a little bit more. The automotive parts part of the company is, a lot of you may have seen this before. They have a lot of commercials that they run for Napa. There's also, if you're in Canada, they have UAP. If you are in Europe, they own Alliance Automotive Group. And in Asia, it's called GPC. Now, the industrial parts part, this is the part, the 1/3 that is for industrial parts. It's very similar in its distribution aspects to the automotive parts group, but they're going to focus just on industrial parts, and it's called Motion Industries. Now, recently they did an acquisition, which we'll talk a little bit more about here in a few moments, but it's called Cayman Distribution Group. Now, Cayman Distribution Group was really interesting because it adds to everything that that company does, and it's similar in philosophies. But as I'm going through everything that I am talking to you today, I'm talking more about identifying a stock that you might want to buy, that you might want to own. But before I get too far into it, I do want to take a moment and tell you about one of the biggest questions that comes up to me when I'm talking to someone about a stock. They say, okay, this is a great stock for today. And if I'm looking at the stock market, I can see the stock market seems to be in free fall and this stock's doing pretty good. So I want to buy it today. But how do I know when to sell that stock? Now, it takes about 10 minutes to go into this, and I'm not going to do that today, but I made a special video. It's a lesson on when to sell a dividend stock. And you can see that if you go over to whentoselladividendstock.com, and you can get a little more information on that. But let's keep going and look at the idea of what we're trying to do today. We're going to really look at some fundamental analysis concepts in the way that we are selecting this stock and the way that we're analyzing it. We're going to look at the company's stability. We're going to look at the company's earnings, and we're going to look at the company's competitiveness. Now, the first thing that we're doing, if we're looking at the company's stability, is we're going to look at their acquisitions. And I mentioned just a moment ago that Motion Industries had purchased Cayman Industries. And Cayman in itself went for about $1.3 billion in a debt finance deal. And the two companies, Motion and Cayman, operate very similarly. So the anticipation is that they will work very well together, and it'll work pretty good toward the future. Cayman in itself only will represent about 6% of Genuine Products Company's overall general revenues. So it's not going to be a deal breaker if something goes wrong. And there's plenty of wiggle room in there for them to be able to integrate everything into Genuine Products' way of doing business and everything overall from that standpoint. So now when we look at the company's stability, the first thing that we're going to look at is we're going to look at a concept that I've borrowed from Warren Buffett. Now, Warren Buffett has an idea that he uses, which is called a moat. And he says, in business, I look for the economic castles protected by unbreachable moats. That's what a moat is. Now, what I've done is I've taken some of the information that Warren Buffett has put together, and I've put it into a short slideshow that I want to go through with you. So I want to point out to you the characteristics that I'm looking at when I'm trying to determine a moat for a company. So I ask myself, and you might ask yourself, what's a moat? We talked about it. It's a barrier between the company and its competitors. And there's really 5 traits. The first one's going to be called the network effect, proprietary assets. Number 3 is going to be the cost advantage that the company may have, switching cost involved, and also the size advantage. Now, the moat doesn't mean that it is impenetrable. It means that it has a barrier and it has an advantage over its competitors. That doesn't mean that it's going to be guaranteed that it's going to grow, but it is a trait characteristic that points towards long-term success. All right, now when we're looking at the characteristics that are evident and present with Genuine Products Company or Parts Company, I keep saying products, Genuine Parts Company, the first thing that we want to look at is the characteristic of proprietary assets. Number 2 is going to be they're really big, so their size advantage has a lot to do with it. Now, in their proprietary assets, it's happening on many different levels. The first thing is going to be really with brand loyalty. Now, I go back to thinking when I was growing up, my grandfather was a mechanic. And I remember going to go visit his shop, and he had these blue and gold boxes in his office all over the place. Those blue and gold boxes, this was back during the 70s. Those blue and gold boxes were Napa parts. Napa's been around for a very, very long time. And he was one of these guys that he really didn't change once he started doing something. And you're going to find that that's the same type of characteristic that exists with a lot of auto mechanics today. 80% of what Napa sells is going to be to the professional mechanic. Only 20% goes to the DIY people like myself. If I'm going to go change my own oil or my air filter, whatever, only 20% are going to be those people who are doing it themselves. A unique thing that Napa does is they have a training program available for their customers, their commercial customers. The auto mechanics, there's a lot of technology that goes into the parts that are put into cars. The electronics have to be learned, the way that the computers work. So what General Parts Company has done is they've created inside of Napa, and there are other companies too, a system where they are training those professional people on how to utilize new technology. That's a big brand loyalty aspect, and it keeps that money coming into the company because those mechanics, they're not going to go over to another company because they're faithful to the company that they like. The parts training for the commercial customers is huge, and that's a good growing aspect of the entire company. Now, when we look at the other parts of the company in itself, Genuine Parts Company has really an exclusive supply chain also. When we have a lot of supply chain issues with all of the ships that are offshore in California, sure, some of those might have auto parts from China and other parts of the world, but there are 70 distribution centers for Napa within the United States, and they have a great distribution system. That's actually working to their favor when we see inflation going up. And we're going to talk about that just a moment here. I wanted to bring up something that actually, if I can find it real quick, this was something that I found from Mario Gabelli. This came out over the weekend in Barron's Magazine. And every few weeks, maybe once a quarter, they'll have a thing where they have experts in the investment area, and they're going to say, these are the stocks that I like. Mario Gabelli is a billionaire stock picker, and Genuine Parts Company is one of the companies that he said, I like this company. Now, in a few minutes, I'm going to tell you some of the downsides of that. Actually, I'm going to save this until I get to that part, and I'll tell you a little bit more about what Mario Gabelli is saying, because I have some fears for Genuine Parts Company, and I want to talk to you about that as we go along too. Okay. Let's keep going on down the line here. I've talked about a little bit of this stuff. Now, the way the company is designed, I've just talked really about the company in the United States. The Napa part of it is about 70% North America. It's UAP and Canada. They also have a good footprint in Europe as well. That's the Alliance Group. And then also they have GPC in Asia also. Now, the business dynamics for Motion Industries is very, very similar to the dynamics for Genuine Parts Company. In other words, the training systems, the distribution systems are very, very similar. So I'm not going to talk a whole lot about that as we go along today. But I do want to get into talking a little bit more about the earnings, because when I talked about Mario Gabelli just a few moments ago, I'm going to talk about some of the trends that are going on with Genuine Parts Company and with their earnings and some of the fears that I have. And then I want to read to you the snippet that I pulled from Mario Gabelli's view on the earnings as well. Now, they're coming up on their, they're going to have their earnings call that's going to be in February, actually on February 16th. So there's a lot of changes that can happen in between now and then. But their fiscal year actually ended at the end of December. Okay. Going on just a little bit more, and we're going to take a little bit of a look at how the earnings have worked over the past year and years so that you can see how things are going. In 2020, the company had net earnings of $16.54 billion. That was, let's say, up in 2021 at $18.32 billion, and that was about a 10.76% increase. That's really pretty good. Now, I'm going to make this screen just a little bit bigger, because what you're going to be looking at here is you're going to be looking at the history of the earnings of the company. And I'm going to go all the way back to 2015 and look at it, how it's working from that standpoint. One of the great things that you can see in this graph, and if you're just listening to this on the podcast, what you're going to see is you're going to see that the company is trending up as we're going throughout the years. But I want to point to something very important. Now, the past performance of those earnings is absolutely not going to be a guarantee of what's going to be happening into the future. This is one of the things that I have as a fear with Genuine Parts Company. That is the company's cost and expenses. Now, if we go back to 2019, we see that they had an increase of expenses and cost of 28.49, and it represented actually 28.49% of earnings at $4.99 billion. Now, if we go forward and we look at 2020, now I know we're in 2022, but we're going to look at 2020, it was up to $5.24 billion. It went from $4.99 billion up to $5.24 billion. That was from 28.49% to 31.69%. It's continuing to increase as the years go by. Now, look what's happened over the past years. If we look at it, we can see that from 2015, 2016, 2017, all the way through to 2020, every single year, operating expenses has increased. That's a big red flag to me. And I'm really concerned about it as time goes by. Now, before I get into the income taxes, I want to take just a real quick moment and I want to read to you a little bit of what Mario Gabelli was saying about the earnings. Now, this is what he says. This is from Barron's Magazine over the weekend. And bear with me just for a moment. I hate to read to you, but I'm going to give you the highlights of what he's saying. And I think it addresses the fears that I really have about the company's operating expenses increasing over a period of years. Barron's asked, what do you like about Genuine Parts? And Gabelli comes back and says, the company benefits from inflation. Gee, we're having inflation right now. There are 270 million cars on the road, and the average age is just under 13 years. Hey, I'm one of those people that's got a 13-year-old car, and I need those parts. Now, the price that he goes on to say, the price of auto parts has been relatively flat for the past 10 to 15 years. Genuine sells 13 billion a year of auto parts. Here's the key part, friends. Listen to this. If its price for auto parts that it sells goes up 3 or 4% and mix and gross margins are relatively constant, and the mix of gross margins with that is relatively constant, here's the key part. It will have higher revenue to cover more controllable selling, general, and administrative expenses. So Gabelli's thought is that, yes, he sees also that those expenses are increasing over the years. I have a fear about that too. But his thought is inflation is actually going to be a benefit to this company. It's going to be able to increase, and those 70 distribution centers like they have in the United States for Napa have a lot of parts on hand they've already paid for. If those prices are increasing, they're going to be able to cover those administrative expenses as time goes by. So we'll just have to wait and see how that works. Now, here's another key part of what you want to look at with this company, what I've been looking at. I know a lot of you have been listening to what's been going on with the Biden administration and the possibility of corporate taxes increasing. I want you to take a look at the impact that taxes has been having on the earnings with this company. And I make the picture just a little bit bigger for those of you that are listening on the podcast. I'm going to tell you what everybody else is seeing right now. If we go back to 2015, we can look at it and we can see that income before taxes at that point was 7.35%. Income taxes represented 4.62%. So the net income after taxes at that point in time, this is back in 2015, was 2.74%. That was the net income. Now, what we've actually seen, though, over the years, we go from 2015 through to 2020. That's the span that's inside of the graph that's on the screen. We went from income before taxes at 7.35%. And that has actually been going down over the years. And in 2020, it was 2.29%. Now, here's what happened. Income taxes actually went down over that period of time. It went from 4.62% down to a negative 0.18%. That's income taxes that Genuine Parts Company is paying. So what it was able to do, it was able to squeeze out a net income. Okay. Now, let me back up just a minute. I said that the net income was negative 0.18%. That was actually incorrect. The net income in 2020 was 1.21%. And that would leave the net income, the income before taxes, at 1.31%. So what we've been seeing is we've been seeing margins squeezed by income taxes. We've been seeing margins squeezed by a lot of other issues. The fear is going to be that if corporate taxes go up, we're going to see revenues that are distributed to customers go down. Okay, So let's keep moving on and get a little bit further into looking at the particular earnings as I'm going to click through to the next scene. So the part that I want you to be understanding is this. Be very watchful of what may be happening because of income taxes as we're going along. If you see a corporate tax, you're going to see a lot of companies that are going to get hit with earnings reductions. Genuine Parts Company is going to be the same way. Now, with a corporation really has choices. They have choices of either having dividend growth or capital gains growth, or both. Now, one of the things that we've seen, though, with Genuine Parts Company is that they have chosen to have dividend growth to their customers. And that's continued to go up with the markets. Now, dividend growth is influenced by the markets and by management. One thing that I point out in that video that I pointed you to, which is called When to Sell a Dividend Stock at whentoselladividendstock.com, is this, that the growth of dividends is not isolated from the price. When prices go up, we're going to see dividends go up too. When prices go down, that is, stock prices go down, we're going to see dividends go down too. So we have to be cautious of that. Now, one of the things that I really, really like about dividends is this. It continues to pay on a consistent basis, and I love dividends and love talking to you about it for retirement accounts especially. Okay, so let's look actually at what's happening with the dividends with Genuine Parts Company. With the dividends in itself, we see that it has a dividend yield of 2.50%. Remember, that dividend yield, that's the percent of the value that it's paying out in income in dividends to customers. Now, as we're going along, that's at 2.5%. What I find so interesting about this company is the fact that for 65 years, this company has had consistent growth. Now, I have to tell you that, of course, past performance is no guarantee of future results, but my gosh, 65 years, that is a management choice. That's what I was talking about before. I was saying that it's a management choice for this company to be paying out dividends, and they've been consistently increasing them over the past 65 years. All right, let's keep moving on now. The dividend growth over the past 3 years has increased by 17.04% on average. And one of the great things that I really like about this company is they have a dividend payout ratio, which is really good. They're not paying everything out. They are keeping some back, but their dividend target, their payout ratio target, is really in between about 50 and 55% of earnings. And they just paid out their last dividend on January the 4th. So they're pretty good from that standpoint. But again, I'm going to bring up the fact that the past performance is not going to be a guarantee of the future results. Now, as we go through this, we talked about the stability. We've talked about the earnings. Now, let's get into that third part of the SEC, which is the competitiveness. Now, Genuine Parts Company, I'll get that right in a minute. Genuine Parts Company is unique in comparison to its competitors. They have about 5,200 stores, and about 1,400 of them are corporate stores. But the primary number is the 5,200. They're owned independently. Now, that has some pros and some cons to it. But when you compare it to like Advance Auto Parts, 4,900 corporate stores and 1,250 independent stores. So it's kind of flipped back over from that standpoint. Compare it to O'Reilly. O'Reilly has 5,740 stores. They're all corporate owned. And also the same thing goes for AutoZone. They have about 6,000 stores. They're all corporate owned as well. Now, let's look. I'm going to make this just a little bit bigger for those of you that are watching and those that are listening on the podcast. I'm going to describe to you a little bit about what you're seeing. You're seeing a spaghetti graph of the companies in itself. Now, I want to point out exactly what you're seeing here. All right. If I can get it to come up. The blue line is going to show Genuine Parts Company. O'Reilly's in red, Advanced Auto Parts is in green, and AutoZone is in gold. Now, What we're seeing here is just the past year, and I took this just about an hour ago. So we see that over the past year, we've had a really pretty good rate of return from Genuine Parts Company. It's around 32.32% over the past year. And we see that a lot of the parts companies have increased. We see that AutoZone's up 58.91%. You might be saying to yourself, hey, I want to buy AutoZone if it's going to have a better rate of return. But you're going to see in a minute what we're looking at here is we're looking at a company, in my discussion with you, a company that's going to pay dividends that can help you to build up a retirement portfolio, or a dividend producing stock that can go into a portfolio that can pay dividends. You won't buy just this stock. It goes into a whole portfolio concept. But the whole idea is this. Other than the fact that the past performance is no guarantee of future results, we're going to look at the 3-year history on this too. 3 years has done pretty good. Over the past 3 years, Genuine Parts Company has paid 50.08. AutoZone's up a whopping 133.7%, which is really good. And I have to repeat again, the past performance is not going to be a guarantee of future results. But let's look at some of the earnings history in comparison to the price of the stock. When we look at that, we're going to look at what I find very helpful, and that's the price earnings ratio. The price earnings ratio right now for Genuine Parts Company is 19.7%. Now, it's hidden on the screen, but actually the S&P 500 is at around 25.08%. And this is actually from Friday. It's going to be a little different today with the market falling the way that it has. Now, when we look at dividend yields, this is why I was saying that, yeah, AutoZone has done really, really well, but it's been more of a growth company. AutoZone doesn't pay any dividends. The only other parts company that pays dividends is going to be Advanced Auto Parts, and it's at around 1.44%. And if I'm looking for a portfolio additive to my retirement portfolio, I'm going to go for Genuine Parts Company because it's paying 2.50%. All right. I like this part. And if you're listening, the reason why that you're hearing a cow moo is because we're going to look at what the bulls are saying. In other words, these are words that are coming from analysts, and these are those that are bullish on Genuine Parts. The first bullish concept that we're looking at is that we're seeing rising car prices are actually encouraging consumers to keep their cars and repair their current cars. We talked about that just a little bit. Hey, I'm one of those people that has one of those older cars, and my mechanic probably uses a lot of Napa parts. The next thing that we want to look at here is going to be, if I can get it to go to the next part. All right. They have a very large inventory. That's a bullish aspect of Genuine Parts Company. They have a larger parts inventory, and they can cope with supply chain issues. And as Mario Gabelli pointed out, that also helps them with inflation because they've already paid for these parts, and they can raise their prices to be in line with what inflation is having going on, and they make an extra profit from it as well. The third bullish concept is that I talked to you a few moments ago about the European aspect of Genuine Parts Company. That's called the Alliance Automotive Group, and they had an acquisition. They were an acquisition of GPC from recent years, and parts in Europe is fragmented. Auto parts, the selling of it is. It's very fragmented. And what the Alliance Automotive Group is looking to do is to put some more cohesiveness into that fragmentation and let a lot of their systems that have worked so well in the United States distribution system work well for them too. And that's actually a bullish concept. And I can't go further without really mentioning again the idea that Mario Gabelli hit on in his article this weekend in Barron's is 270 million cars are on the road in the United States right now. And the average age is 13 years. Genuine Parts, here's another part that Gabelli pointed out. They use a different accounting concept called LIFO. It's last in, first out. And what it does is it allows them to defer taxes. And just like if you have a retirement account, you defer the taxes so that it can continue to grow. Now, Genuine Parts Company, uses the LIFO accounting process, and what that allows them to do is to defer paying taxes, so they're able to use that revenue for something else. So it's a big advantage to them as it goes along. Now, we can't just look at at everything through rose-colored glasses, and that is, we have to look at the bearish concepts too. This is what some of the analysts are saying that have bearish outlooks on Genuine Parts Company. Number one is, having more independent stores does limit the potential for increased corporate margins. In other words, if you've got a company like AutoZone, they have a lot more control over the way that their company works because they own all the stores from a corporate basis. When you have a company like Genuine Parts Company that has most of its stores owned independently, those independent owners, it's kind of like a franchise in a way, they don't have as much influence over what they do. They have some, but not as much as a company like AutoZone that is owned by the corporation. So that can be a bearish sentiment when we're looking at a company like Genuine Parts Company. Number two is in the same vein of the way that the company works. Independent stores actually tend to have higher prices. Now, the good thing about that is, remember previously we talked about that 80% of sales that goes on for Napa stores here in the United States is to the professional mechanic, and 20% is to the DIY people like me. The good thing is that the parts going to the professional mechanic, that mechanic really doesn't care that much about a little bit more price, because he's going to pass it on to the customer anyhow. So that's an advantage in a way, but it's a disadvantage because they do tend to have higher prices, and the DIYers are going to be looking more for the lower price out there. Number three, and this is something that really is going to be characteristic of any business right now. COVID and supply chain problems are two unknown outliers that are absolutely hammering every company that is out there. And Genuine Parts is not isolated completely from that. They have some advantages because of their distribution system, but they're not isolated from it. Number four, there's really very limited opportunities for growth through large acquisitions. Now, Motion Industries just finished the acquisition with Cayman, and that was a good thing. But if you look at all the other parts distributors that are in the United States, or even on an international basis, really more in the United States, there's not a lot of acquisition that can be going on. We talked about the competitors. They're big on their own, and they're probably not looking to be bought, but that could be changing in the future. Who knows? So, but that's a limiting factor. It's a bearish sentiment when we're looking at a company like Genuine Parts Company. All right. As we're getting toward the end here, we want to really look at the actual value of this stock. And when we look at the value of it, what we're trying to do is we're trying to ask ourselves, hey, if I like this stock, is it a good time to buy it? So let's look at what the value is and what some of the analysts are saying. Friday's close is at 130.58, and actually today I think it's up just a little bit, ironically, with the market in free fall. Morningstar is pegging the fair market value of this stock at $136 per share. So really, it's selling at a premium, being at around $130 per share. That means it's a little bit of a bargain right now. Morningstar rates it as a 3-star, but remember, look, when you look at the star system for Morningstar, don't think that all 5 stars are great. When we're looking at the star system, when it's related to stocks, it's not the same as it is for mutual funds. With mutual funds, there's a lot of other characteristics that go into it. The primary characteristic that goes into the star the stars that are attributed to the stocks is going to be the value. You'll see that if it goes down, the star number is going to go up. That is, if it goes down in value. If you saw it go down to around $95, it's probably going to be a 5-star stock. If you see it go up to $140, it's probably going to be a 2 or a 1-star stock. That's the way that star ratings work with Morningstar. All right, Let's look and see what some of the different analysts are saying right now about Genuine Parts Company. And really, there's only 6 analysts that have given their view in the past 12 months. In general, with those, we see that one of them says that it's a strong buy, but we actually see that 4 of them are saying that it's actually a hold. And then there's only one that's saying that it's a moderate sell. So the whole thing is going to be that we're looking at this as being a hold. All right, put a little comedy in there. Okay, let's keep going on. I want to make this one just a little bit bigger for those of you that are listening to this on the podcast. I'm going to describe to you what you're seeing here if I can get to the right button. All right. This is a graph of those analysts and the spread that they're saying is available for Genuine Parts. What we're looking at is the most recent analyst that gave their view on it was Truist Financial, and that was back on the 13th of January. They're looking for a price right now at about $142. The next one in time relevance is going to actually be Stevens, and Stevens analysts are saying that they're looking for a spread between $130 and $141. Goldman Sachs had their last review back in about, it looks like April of 2021, and they said at that point in time that they're looking for a price between 113 and 125. Argus was 109, 140, JP Morgan between 115 and 140, Royal Bank of Canada between 115 and 129. And I talked to you just a moment ago about the fair price that Morningstar put on Genuine Parts Company at around $136. Remember, with Morningstar, when the price goes up, the stars go down. And actually, if they were to go to a 1 star, the price would have to go up to $183.60. They've already got it picked out. If the price were to go down to $95.20, they're looking at as a good buy, and they're going to say it's a 5-star stock. But in general, if you're looking at the screen, you see the green arrows. Most of these companies are looking for a price of around $140 to $142, generally like that. And today, trading at about $130, I think that we're seeing that most analysts are thinking that this is actually a really good bargain right now, including Mario Gabelli, which I mentioned to you just a little bit ago. Okay, as we wrap this up, the whole point that I want to get to is we're looking at really, or I'm helping you to look really at the fundamental characteristics of this stock. There's a lot else that goes into when this is the best time to buy this stock. We've looked at the company's stability, we've looked at the company's earnings, and we've looked at the company's competitiveness. If you want to learn a little bit more about some of the other characteristics to look at when you're ready to sell, or when would be a good time to sell this stock, go over to the site that I created that's called whentoselladdividendstock.com, and there's a wonderful resource there. It's a video lesson that I've created just for you so that you can get a little bit more information on what you should look at when you're ready to sell a particular stock. Okay, so that kind of brings us to the end of what we've seen today. Okay. Generally, the way that we're going to work is I'm going to get to the end of this. I'm going to talk to you just for a few moments about some of the questions that people have brought up and some of the comments that have been brought up. And one of the big questions that came up this week was when I'm talking about a particular stock, they're asking me this question. They're asking me, why are you picking this particular stock and to talk about? And one of the reasons that I'm picking Genuine Parts Company to talk about is because it pays dividends, and because I think that if you're creating a retirement portfolio, that this is a very good addition to that. Now, it's not the only stock. Generally speaking, you'll find out how many stocks that I put into a portfolio when you go over to whentoselladdividendstock.com. And I can tell you this, it's not going to be one. It's going to be quite a few more. I'm looking for diversification, and this is a good company to look at it from my perspective. You have to use the information that I've given you today and anything else that you keep in mind to make your own decisions on what you should sell. Now, I will ask you that as we end today, stick around just for a moment. I want to thank you for coming, and come back next Monday at 1 o'clock because we'll be looking at another dividend stock. But as we end today, I want to remind you to take just a moment and read through the disclosures that it's at the very end, because I can't give you personal investment advice, and there are limitations to what I'm able to do. There's more information in the disclosure. If you're listening to this on the podcast, stick around and you can hear the disclosure too. So have a great Monday. It's raining here in Houston. I hope it's better wherever you are. Let's hope the market turns back around. I think it will. But if it doesn't, just stick it out and buy what you feel comfortable with. Thanks for listening, and I'll talk to you next week.